luxury assets are supply constrained. They have higher barriers to entry. It takes more money to build them. It's more complicated planning. It takes more time. There's only a finite number of locations you can put a luxury hotel where you can generate the sort of rates that justify building such a great product.
I'm here today with Richard Stockton, CEO and President of Braemar Hotels and Resorts. 2 years after the beginning of the pandemic, how are luxury resorts performing as compared with lodging and resort REITs more broadly?
Luxury resorts are on the rebound and fully recovered and then some. The ADRs for our portfolio of luxury resorts in the first quarter was up 70% versus 2019, which is a pre-pandemic comparable period. That compares to ADRs being up closer to 20%, across the lodging industry generally. So it's really the combination of luxury and resorts, two things that are bouncing back, and we've been a beneficiary of that, having 9 out of our 15 hotels be resorts.
How has Braemar's RevPAR been performing so far in 2022, and what do you expect it to do through the end of the year?
Our RevPAR's up 20% versus 2019. And that's a combination of the outperformance of our resort portfolio and, I'd say the underperformance of our urban portfolio. So 9 resorts, 6 urban. What's interesting for us is the urban assets are about half of our number of rooms, contributed no EBITDA for us in the first quarter. They kind of netted to zero, they broke even. Nevertheless, the 9 resorts that we have generated record levels of EBITDA. So we had our best quarter ever, with nearly $60 million of EBITDA in the first quarter, which is about 30% higher than we had in 2019.
Talent acquisition and retention have become more important for many companies since the start of the Great Resignation. Being in the luxury resort segment, do you find there are additional or unique benefits that Braemar is able to offer its employees?
Yeah, sure. I mean, look at our locations. If you like to ski or snowboard, how'd you like to work at the Park Hyatt Beaver Creek or the Ritz-Carlton Lake Tahoe? If you like the ocean, you can work at the Ritz-Carlton Sarasota, you can work at the Pier House in Key West, Ritz-Carlton Reserve in Puerto Rico, Ritz-Carlton St. Thomas. I mean, what a great place to work. And so we do have difficulty sourcing labor as many of our peers, but less so, I'd say. We don't have any rooms out of service due to labor shortages. And in this market, that's an achievement. And I think it is because our places are great places to work. So when people aren't serving their guests quite happily, they're spending time enjoying the area, whatever that is. It could be beach, it could be mountains. So yeah, it's definitely been a benefit. I think that's helped us get through this period of a tight labor market.
If you were giving a 30-second elevator pitch, what would you say are the 3 top reasons to invest in your company?
So I'd say it's quality, growth, and growth. In terms of the quality, we have the highest quality portfolio of hotels amongst any of the lodging REITs. Our RevPAR now is about $100 higher than our next closest competitor, and that's an objective measure of the quality of our hotels. We're invested in the luxury segment, so I said it's growth and growth. It's short-term growth and long-term growth. In the short term, our resorts are performing extraordinarily well, and I said our urban properties have nothing but potential. It's half of our rooms in the first quarter generated no EBITDA. They came into the quarter at a 30% occupancy. By the end of the quarter, they were at 60% occupancy, and it's gone up from there. So we're going to see additional contribution from the urban side of the portfolio while the resorts continue to hold up very well. And so that will see our results really catapult. And then long-term growth is by being exposed to the luxury segment in general. If you look back over the last 30 years, and you go back to 1987, the luxury chain scale segment has generated 4% annual compounded annual growth rate in RevPAR versus 3% for all other segments. That's why we specialize in luxury.